Hello, traders. Gary Wagner with the Gold Forecast. Approximately 10 a.m. in Honolulu, Hawaii. It is the 27th day of the month, Wednesday, and this is the Daily Report. Although I was expecting some sort of a pullback here, when we saw gold trade past the 1518 mark, meaning the former high in the market, it was quite apparent that this particular rally and this particular wave are not over yet. You can see that right here. We broke that substantially in this morning's trading, and therefore I did issue a buy signal based on that breakout. Traders who got into that trade are in roughly $3 below this point, somewhere around 15.25. This market is currently trading 15.28 and change, but we do see a major breakout in the market currently. We are looking at a 240-minute candlestick chart. It gives us the best ability, or the best way really, to see the kind of breakout that we've gotten. And you can see that has happened really over the last 4 hours of trading, ever since the conclusion of a Federal Reserve meeting, which was had this morning. Now, you can see in this marketplace, it has come off of these highs ever so slightly. The high that it hit was 1530, and as you can see, it's backed off just a little bit. I would not be surprised to see smaller dips within the marketplace itself. But when we take a look at the market itself and we do a simple Fibonacci retracement, in other words, where do we think that marketplace itself could go in terms of any kind of a retracement as it pulls back. And really what you're looking at is probably, I would say, 1521 on the low side if we actually do get a dip. The key is that we have not been really seeing this market trade in any typical manner. This market is absolutely a runaway bull market. We have gold right now trading at record all-time highs. We have silver just coming off of $50, currently trading at about $47.88. These metals seemed destined to move higher. Now, when we go ahead and convert this into a 60-minute chart, I've got the same Fibonacci retracement area drawn on, and I'm just going to make sure that it's completely lined up with where we need to be. And you can see in terms of a dip, if I take a look at this move itself here, which is a move from 1492 all the way up to 1530, you can see that the only real place that we might see any kind of a dip come to is going to be around 1521. As I said, we are not seeing typical activity in this market, but to be honest with you, we certainly do not have a typical gold market. This market, as I said, I believe is destined to move higher. In terms of the area that I'm looking at longer term, I'm still shooting for 1575 to 1600 over these next two waves. On this particular move, I have done some calculations, and 1594 could easily be achieved. Remember, traders, we are in a long-term bullish cycle, and we are at a crux or a point in that cycle in which this market is highly spirited to move higher. Traders, lastly, I want to look at a very, very short-term chart. This is a 30-minute gold chart. It is in Henkin or Japanese average format. And what you can see from this chart is the sheer acceleration that we witnessed as this market moved up. And you can see that in a very subtle way, it is beginning to wane right now. You have these body sizes getting smaller. However, you still have these absence of tails right in here. You've got good body size, and you can see that after coming out of a period of consolidation in which the market traded in a very narrowly defined range, we have had a true breakout to the upside today, and that breakout is absolutely, absolutely substantial, because we are now looking at gold that is anywhere between 1527 and 1530 per ounce. We are looking at silver that's almost at $48 per ounce. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange.